there are over 20 million people in the UK that are investors, whether that's investing in property, stocks, cryptocurrency, the list goes on. Out of those 20 million people, there are 1.6 clever investors who distribute a proportion of their wealth to ETFs. This number has dramatically increased from 1 million back in 2022, and it's continued to rise since then. Now, it's of no surprise that the UK market is the fastest and most popular market when it comes to ETFs growing as a way of investing compared to their European counterparts. The barrier to entry is super low, but with that low barrier, people don't have the understanding of what an ETF is, the fees and charges that come with them, and the common pitfalls and mistakes that people make early on in their investing journey. We are often advertised past results and predicted gains when ETFs are marketed to us, and this can be misleading if you don't understand the whole concept and what's made up of these ETFs and what's really driving the returns. In today's video, we'll be breaking down what is an ETF and how do I invest in them, the best performing ETFs today and so far in 2025. We'll also be doing some live investing at the end of this video, so stay tuned for that, as it will be a reflection of my current portfolio. But first, we must understand what an ETF actually is before we get involved. Now, essentially, an ETF is an exchange traded fund. It's basically a way to buy and sell something on a stock exchange as you would like a normal stock. Now, essentially, an ETF can be made up of a basket of goods, whether that be stocks, different asset classes, and such as bonds, and as well as commodities. Now, instead of buying these individual companies like Apple, Nvidia, Alibaba, etc., you can buy these all at once, all in a fund. Now, this is important because you get the diversification aspect of the ETFs. Most ETFs are much cheaper than a mutual fund or an actively managed fund, and they are easy to trade and buy and sell during market hours as they are on an exchange. Now, the best performing ETF so far in the UK is the EWU ETF. Now, this is currently up over 20%, and in my opinion, it's quite surprising. Now, we have seen a shift and a positive sentiment towards the UK so far as the dollar becomes weaker, and with this unpredictability of tariffs and Donald Trump, investors and large funds are transitioning to European asset classes, and the UK has benefited from that so far. Now, the fund has maintained a fair valuation level with a PE ratio of around 17.5, which is a fair valuation considering the global volatility so far and the uncertainty with the markets. Overall, within this ETF, the sectors that dominate this fund are financials, consumer staples, as well as industrials. This is then diversified across small and mid-cap companies within the UK. Now, a question that I get a lot all the time is dividends, and how can I get involved in companies that essentially pay me a residual income just for holding the shares within that company. Now, if you're one of those people, I guess, again, this is not financial advice, but a good stock for you to do your own research on is IUKD. Now, this is currently up just over 15%, and it pays a healthy dividend of 5.2%. Now, the companies within this ETF are quite mature UK companies, and because they're quite mature, they have a lot of cash typically that they're sitting on, and instead of them diversifying and making acquisitions or investing in research and development, what they're opting to do is pay their shareholders just to hold this stock. Now, the dividend yield of 5.2% again is a very attractive yield considering the stocks that are held within this portfolio. Now, if you're going for pure growth, this probably isn't something for yourself, but definitely one to look at. Now, the expense ratio is slightly cheaper at 0.4%, and considering the return and the fact that you're getting a dividend, it's definitely a favorable ETF to consider. Now, CSUK is currently up 10.4%, and similarly to the first ETF we discussed of the sectors that these ETFs are being exposed to, this current ETF is being exposed to the same sort of industries. It's almost like consumer, industrials, and financials is the new tech when it comes to UK companies, which is kind of strange. Now this does have a lower expense ratio, but out of the three that we've discussed, I think the dividend one is definitely the most promising one, considering that you'll get that dividend on a quarterly cadence. Now, as we do every month, we'll be investing within our portfolio. So far as there hasn't been too much volatility to the downside, I'm not investing in any particular stocks at the moment. However, that could change if prices decide to look even more presentable. Now, at the moment, we'll be investing in our S&P 500 ETF and our All World ETF. So we're getting diversification of both sides of the market, although the All World ETF does have just over 60% already committed into the US. Now, again, very, very simple setup that we've gone here, and this is something that I will continue to do on a monthly basis, and I'll also alter my positions considering the volatility that occurs, or even if it does occur. Now, let me know your thoughts. What ETF strikes you the most? Again, personally, I think the dividend one looks great as it gives you that yield and potential income, but let me know your thoughts. And again, if you want to dive into these separately, I've linked below some links where you can see and have a look at these ETFs for yourself. So let me know if you find that helpful.